Welcome to Infinity Capital, everyone. My name is Raj. We are going to discuss advanced enzyme technologies today. So, as the name suggests, the company is in the business of manufacturing and sales of enzymes, right? So, enzymes are used in multiple industries, multiple areas. So, they have around 400 proprietary products, and this has been developed from over 70 enzymes and probiotics. So 75% of their revenue comes from the human healthcare uh, division. So basically, they provide proprietary enzyme products and customized enzyme solutions to various pharma companies, nutraceutical companies in India, America, Europe, and other companies globally. 13% of their revenue comes from animal nutrition and 12% comes from industrial bioprocessing. So it is, in the non-food processing enzymes for industries such as textiles, leather, detergent, pulp, paper, so on and so forth. So this company has presence in 45 countries. They have around 700 customers, so it's a pretty widely diverse customer base. 43% of their revenue comes from India, 42% comes from America. So there is a revenue concentration, in America, right? So that is something that one needs to take into account if you're doing long-term investment. They have 5 manufacturing facilities, 2 are in California, right? And they have a 480 million fermentation capacity, which is installed right now. So 5 R&D facilities, 4 in India, 1 in Germany. 3% of their total turnover is spent on R&D capabilities. These are the recent acquisitions that they've done: JC Biotech, Evox Technologies, Skytech Specialty. So mostly these acquisitions are essentially happen because there is some sort of technology. These companies have some sort of IP, and once you acquire these companies, you have access to these IPs, technologies, research, and you can use them to enhance your products or come up with new products of your own, right? So we are going to go through the ratings of the company. I always look at the ratings. So they have around 100 crores of bank loan facilities rated at A+, pretty good, right? So we're just going to go through the history of the company, what the company is about. Company was set up in 1989 by Mr. V. Rathi and Mr. C.L. Rathi. So the company started as Advanced Biochemicals, then its name was changed in 2005, right? So it is one of the largest Indian enzyme companies, and they cater to a wide variety of industries, right? So and human healthcare and nutrition, animal healthcare and nutrition, bioprocessing of foods, bioprocessing of non-foods, biocatalysis, so on and so forth. So they have a lot of subsidiaries, obviously, because they have an R&D center in Germany. They have facilities in US. So they have multiple subsidiaries listed under the parent company, right? Now, what are the risk factors in the company? So the risk factors in the company are, I'll just show it to you. Just give me one moment. So operation remains working capital intensive. So basically they churn their inventory in every 122 days, and they pay off their debtors in 62 days. So since they churn their inventory in a long time, takes roughly around 4 months to churn their inventory. That is the reason why there is a lot of capital stuck in the inventory. However, the company is debt free, so they don't have any working capital requirement constraints as of now. Okay, so this happens to be one of the challenges right now, right? Apart from that, susceptibility to regulatory and compliance related issues, right? So they are in the business of providing substances which go into human health, nutrition, food processing and stuff. So some sort of regulatory or change in regulations can affect their business. Okay, so however, they have a lot of patents to their products, so they enjoy some sort of advantage also with the products they have patents on, right? So overall, the company's numbers look pretty robust, I'm going to take you through Tijori. So they have around 10% of market share in the nutraceuticals segment. Okay, and going to show you another interesting stuff when we come here in the financial segment. If you see their CFO cash flow from operations, past 5 years, it has been, growing at 21%. 10 years, it has been growing at 34%. So they've been, good cash flow accruals, Now let's go on to the investor pattern, shareholding pattern. So promoters have diluted the stake a little bit. Last year they were holding around 58%. This year, they are holding 52%. 6% has been diluted. That has essentially gone to the FII. So if you see, FIIs were holding 10-11%. Now they hold around 16%. Okay. So FIIs have basically bought over the stake. Okay. Public has around 22-23%. All right. And out of that, if you'll see, there are significant big investors with huge chunk. So there are individual investors who own huge chunk of this stock. Right. Now I'll show you another interesting thing. If we come here on trend line, if we see the mutual funds trajectory since in Feb they were holding around some 670 lakh shares. Now they are holding 92 lakh shares. So mutual funds have significantly increased their holdings, in Advanced Enzyme. So that is roughly 20. They have increased 20% more. 20% of they have increased their holdings by 20%. And if you'll see, your holders have also increased from 9. It has become 16, right? So this information is available on Trendline, guys. You can just go and check it on Trendline. Or you can also go and check the shareholding pattern. So you will see a clear indication as to who's buying, who's not. Okay. Right. Now, the interesting thing to note here is that the mutual funds have increased their stake since Feb. If we look at the chart, this is Feb 21. So basically the stock is pretty much at the same price. So if the mutual funds have bought, let's say, so this data, just hear me out, guys. So this data must have been, the data is released at the end of the month. So my guess is they accumulated between Jan and Feb, right? And then it reflected in the March data. So if we come here, we just, make a calculated bet. So Feb, Jan. So basically, ideally, they have accumulated this stock between 300 and 380. And the stock is currently trading at 400 rupees. So, any dip, this is a good place to buy this. Any subsequent dips are going to be great buying opportunities, right? So this is how I make my analysis. It's a bit technical, but it's pretty simple if you know what I'm talking about. Right, now let's go on to the cash flow. We saw it earlier. The cash flow has been growing at a CAGR of 21% in 5 years, 34% in 10 years. So that's the cash flow numbers are pretty robust. They don't have any borrowings, no dilution in equity. Stock got listed in 2017. They have around 121 crores of investment, 200 crores of cash. So roughly around 320 crores of cash they are sitting on. So that will basically support their working capital requirements very easily, and their gross block as well. As in, if they want to do any sort of capex, it will also support that. They won't have to take any loans. So the gross block has increased over here. So they may have done some sort of brownfield, greenfield expansion. Right. So if you want to hold this stock for a longer period of time, you can go and do some in-depth analysis. I am looking to hold this for the next 2 quarters. So, I'm just going to go over through a few things, my standard analytical procedure. Let's look at the sales growth. So sales growth has been 5 years, double digits, 10 years, double digits, 5-year profit growth has been 13%, 10-year profit growth has been 24%. But if you see overall, the stock got listed in 17, right? And it was making 90 crores. Currently, the stock is the company is making around 150 crores. So roughly about the profits are up by about 50%. So ideally, the stock should also go up by at least by 50 to 60% from here. That's my understanding, right? And plus, if we look at the quarter-on-quarter numbers, the numbers are pretty robust, pretty good. March they had a certain fall in a fall in margins. So I'm going to wait for the June numbers, and if the sales are steady, and there is a bit of a drop in margin, or the numbers are steady, I'm going to then jump in. So we might get the stock a little cheaper also. On a P analysis, if we see the median P since the stock got listed, the median P is around 27. Stock is trading at a P of 31. For a company which specializes in products and it has patents and stuff, they have around 400 proprietary products. I think it is currently undervalued, and for a company which is constantly growing its sales and profits with profit margins of 45-47%, this stock should be valued at a higher price, right? There aren't many companies who make 42-45% margins, right? So let's just go do a quick technical analysis. This stock got listed in September, around September 16. If we look at the March numbers, annual report comes in March. So March 2017, the company was making 90 crores, right? Currently the company is making 150 crores. So the profits are up by around 60 crores, right? So the profits are up about 75%. My guess is that this stock should go up by at least 75-80%. That's the least it should go up, right? So on a week-on-week basis, on the weekly chart, what do we have here? We have a flat 50-day moving average. Actually, it is not flat; it's trending a little downwards, and we have a rising 200-day moving average. So basically, if you see, the stock has not gone anywhere since October last year. October it was trading around 380, 390, average price was 365, 340, 360. Currently stock is trading around 400, right? So stock is around 14-15% up. It did have a good rally, but then it sort of succumbed to selling pressure. So this could have happened because if you see, this was the highest point, right? And after getting listed, the stock went up, and then it corrected significantly. So from its all-time high, the stock went down by 80%. That's significant correction, right? So some sort of selling is bound to happen here. It's pretty all right, but I expect the stock to start consolidating within these levels. So what am I looking for? I'm going to wait for the June numbers. Once the June numbers are out, then I will start accumulating. Okay, so what is the range that we can look at? So basically this is the range between 330 and 400. This is the range where I will be looking to start accumulating the stock. What sort of upside am I expecting in this stock? I'm expecting at least 60-80% upside in this stock. As far as the numbers go, so if we look at the quarter numbers, March the sales were on a higher clip, but because there was a drop in the margin, the profits were not that high, right? So we will have to wait and watch what the June numbers are like. Another thing is that they have seen constant growth. If you see, there has been a very strong growth trajectory in their sales as well as profits. So this also calls for a case that the base becomes bigger. Last year they did 129 crores, then they did. So it could also happen that we might see some sort of aberrations. We might probably flatline for a bit. That is the reason I am waiting for the June numbers to come in. Once those numbers come in, and if they are not bad, overall, I'll compare the year on year quarterly numbers and the 9-month numbers, and if it's not that bad, I will start accumulating the stock. So I already traded this stock, bought it at around 360, 370, and then I sold it off around 450, between 450 and 440, because it was starting to break down. So I did take a trade earlier. I was planning to hold on to it for a longer period of time, but it became a little volatile, so I got out of it. But now this is settling here. It is sort of consolidating, and the numbers are also pretty good. So I will start accumulating this stock again. It's a very high quality company. Balance sheet is very robust. If the numbers keep coming in at a higher clip, there is no reason why this stock should stay at such low levels. For a company whose sales and are growing at double digits, profits are growing at double digits, this stock has this stock is trading at very low valuations, and price wise also it is pretty low. So this was the analysis, guys. Quick disclaimer, this is not a buy sell recommendation. So this is just an educational video. Thanks a lot for watching.